Hey traders, what's going on? Jamie Setley here. It is November 9th, 2015, and Monday after the big NFP blowout of 271,000. Regarding that 271,000, I've never really understood what that number means, and what I mean by that is, okay, so we have 271,000 jobs added, 165,000 of that 271,000 is an adjustment by the BLS. So whatever. I don't really know what that number actually means. Um, Seems like a magic made up number, but whatever. Okay, so it means that the Fed apparently is going to raise rates now in December. Okay, so we're looking at the bond market here, 30-year T-bond, and if interest rates are bottoming, bonds are topping, and we actually have a perfect channel going back 35 years. And we had this key reversal up here in April, and clearly resistance was the August sell-off closing near the lows, resistance with October closing near the lows, and obviously off to a bearish start here in November. Okay, so as this pertains to the U.S. dollar, you'll hear, I'm sure, many claiming or saying that because rates are going up in the U.S., that the U.S. dollar has to continue to go higher. And I'm not saying the U.S. dollar is not going higher, but I'm saying just that alone doesn't really hold any weight. Let's look at, compare this, the dollar index. Okay, so certainly there are times when that's true. Okay, but you have to look at, FX is all relative, so you have to look at the interest rate differentials. You got to look at what's happening in the other countries as well. All right. So here you can see actually for the last year we've really been going together, probably longer than the last year. All right. The dollar really took off starting middle of last year, and since then bonds have been going straight up as well. They both peaked together actually earlier this year in March and turned down, and now they've diverged. Okay, so you do have the dollar index at a new high, and bonds, failing and rolling over. So while it may be that the dollar has broken out. Okay, the dollar can continue higher here, but it doesn't mean it's happening just because of rates here in the U.S. All right, just know the two charts. Okay, so as we progress here and go forward, be watching for support down near the June low, longer term, okay, and see what happens there. That's a big spot. You had resistance up there from the slope line, same slope as the channel, okay, but 2003 high, 2010 high, support for a time in 2013, lots of wild consolidation and trading around this level back in 2014 and into early this year. Okay, let's take a little shorter term now, and we'll look at the daily chart here. Continuous contract December prices, and this was NFP back in October. Actually, I put out a public tweet then saying we were at resistance, and you can see it's right there. So since that point, it worked out pretty well, and we've come off substantially. We are now getting into a point on this chart where we could actually see some support, a little lower. Okay, but what that tells me is that we come into support, we get a bounce. It tells me that the S&P probably is going to sell off too, because you think the theme right now is all about the Fed raising rates, blah, 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 and they've backed themselves into a corner, obviously. But, they came out in September, didn't do anything because they were freaked out about stocks going down. Then after stocks rallied, they are no longer freaked out. So, yeah, okay, we're going to do it. Well, if stocks start to come off again, bonds will start to rally again. It's all the same thing at this point. And the Fed will probably come out with some concerning comment, whatever, and that would hit the dollar. So just saying, watch the bond market. If you start to see support down here, okay, then you start to head higher from this region, and stocks are selling off. You probably actually will get I would say that would probably cause headwinds for the dollar at this point. You probably see the euro bid as it's basically been turned into the old Japanese yen at this point, given that it's a funding currency now. So point is, watch the bond market. Okay, support here probably at some point this week down near these levels. Okay, June high in line with slope, downtrend support. Okay, so maybe not necessarily something to trade, but think about it in terms of of what's going on with the dollar. Okay, and where it's trading against various counterparts. So something to consider this week. All right, so that's it for this short video, and Jamie Setley here signing off, and good luck.